On to volatility. So realized vol continues to fall. So because the market's kind of has stopped accelerating to the downside, we've seen realized vol fall back pretty steeply. So you can see the yellow line obviously had its big pop up above 100. It started to move down already last week, and it's continued, just not at quite a furious pace. But we've got realized volatility in Bitcoin down in the 30s now. We've got Ethereum down in the 50s. These are pretty much the similar sort of levels that they were at before the FTX stuff even happened, right? Which is quite interesting, given the amount of uncertainty there is in the space, and the fact that market participants are kind of sitting there with bated breath for the next ugly headline to hit, and yet volatility just disappeared, right? So I think it's partly because activity is dropping. People are kind of liquidating what they need to liquidate. I think as activity drops and people are just losing confidence in the space, you're also seeing volatility dissipate. But if a big enough headline hits, then you will suddenly see gappy markets because they're not as liquid and they're probably a bit thinner than they were, basically. So that's something to be aware of. So whilst you may get these periods of really low realized vol, you'll then suddenly get gaps as well. Okay. Implied vols did follow realized down, but not to quite the same extent. So you can see the trajectory of the realized vol versus the trajectory of implied. So then we've got our red bars are still in positive carry territory. So whilst implied vols did sell off, 10 to 20 vol points into the Thanksgiving holiday, they've had a little bit of a bounce as we've come out of that, because there are a few macro catalysts coming this week and next week, like FOMC, CPI, things like that. So, implied vol is probably going to hold a level here. It's already pretty cheap, right? It's in the 60s on Bitcoin, and it's in the 70s on Ethereum. So that tends to be the lower end of the implied range anyway. So I think there will be some risk premium. So you will see positive carry in this market for a while. Even if realized stays low, we're likely to see positive carry because markets will attach a risk premium. And the only way that risk premium really ever goes away is when either you don't have a load of uncertainty like we do now, and you don't have a load of macro data coming up that's going to potentially move markets. But then also risk appetite needs to be there, right? There needs to be people in the market with enough risk appetite to sell volatility and take the risks that come along with that. And obviously the recent turmoil would have blown quite a lot of people up who were those people who were happy to provide liquidity and sell optionality. Some of those would have gone away now. And therefore they won't be there to compress that volatility premium. And then also DeFi. The DeFi option vaults were a big seller of gamma systematically, weekly gamma to the street. And whilst they are probably still selling it, the amount of the TVL, the total value locked in these DeFi protocols, has fallen dramatically, right? These things were in the hundreds of millions, and they've dropped down a lot, right? I mean, we're looking at Friction, which is one of the major ones. I was having a look at that, and I think that stuff's now less than 10 million TVL when it was in the hundreds. Right, so it's got crushed basically, right? Ribbon, I believe Ribbon is the biggest one. I haven't seen the numbers on what their TVL is down to, but it wouldn't surprise me if it's come down a long way given what's happened in the space. Okay, if we then move over to term structures. So term structures, the current term structure is the green lines. So you can see a week ago they were inverted to flat. They've now moved back towards contango. Which makes sense, obviously, when realized collapses, that's what tends to happen. But they're not as low as they were before the FTX. So you can see the implies did get even lower. You saw Bitcoin front end, in the 40s. So it's still a little bit ways away from that. I think it's going to take some time for Bitcoin implied vol to get down to 40 again, given what we've just experienced. Now, if you look at Ethereum, that is actually... front end is back down to the low levels that it was, because it was just an absolute, it never got as low as Bitcoin vols. It didn't get down into the 40s basically, right? So it's just, so it's got back to its lows in the absolute front end, the weekly stuff. But that's just because it's an absolute level of vol that's a bit higher basically. If we look at the spread, we can see that the spread trades 15 to 20 vols across the curve. It's realizing 20 to 28. So it's decent value at 15 at the moment. I mean, it can easily go through periods though where it realizes 10. So I'm not jumping up and down about owning it at 15. But if it was to get sub 10, it'd probably be a bit of a no-brainer to buy some, especially in the longer term maturities, because I don't think it's going to be at 10 for a sustainable period of time, because I think Ethereum's just got a hell of a lot more potential to move around in both directions. So I'm waiting to see if that spread can get down into the 10s, a bit below 10, and I can get some of that on in the longer dated maturities, maybe in June 23. That's probably what I'll be looking to enter, setting up that trade for next year if I'm lucky enough to get into those entry points and get into those levels. But I'm not rushing to buy it at these levels at 15 right now. Okay, so that's relative value and term structure. If we look at what's going on in SKEW was lower by around 7 vols on the week in the 1 month maturity. Medium term SKEW holding up a bit better, but still lower on the week, more in the order of magnitude of like 3 to 4 vols. As both a combination of less downside realized. So obviously we didn't accelerate, we didn't break support levels, so we're not realizing as much to the downside. So SKEW doesn't need to be as elevated because it's put SKEW we're talking about. So partly kind of coming in line with the lack of realized on the way down, partly because some bullish option flows were entering as well, where people were looking to buy calls and sell puts to take advantage of this relative pricing being too steep and use that as a way to get long the market. And then lastly, monetization of hedges, right? If you had owned some puts and puts exploded and you were holding onto them in the hope that this thing was going to break even lower again, maybe now you're throwing in the towel and saying, okay, my hedges have done their job. They made me a bit of money. It doesn't look like they're going to keep making me any money, so I'm going to bang them out and monetize them. So that will be a seller of puts and a seller of SKEW that pushes that part of the curve back down. But now that the spike in SKEW has retraced quite considerably, so you can see that on these charts here, that SKEW got to like 40 vols in Ethereum. It's back down to like 10 to 15 again. Bitcoin got to nearly 30 and it's back to 10 as well. So a big correction back down in SKEW, both in the 1 month and the 3 month. So I suspect even if SKEW does continue to come in, it's not going to do it at quite a ferocious pace. And it'll be more of a grind back down in SKEW from these levels if that does happen. If, however, we do break those support levels that I've flagged on the charts, then we could well get some fresh upside in SKEW as hedging flows then come piling back in because they don't know where the bottom is in this thing, and they will be needing to hedge it basically, right? So just be aware of that. And then lastly, Ethereum medium-term SKEW really holding a relatively more sticky bid, as people kind of fearing that the next round of liquidations over coming months from the fallout of FTX is likely to impact Ethereum more, and there may be more casualties to come over that longer window of time, whereas we might not find out in the next few weeks, but we might find out a few months later, similar to what happened post-Luna, right? We didn't know what a mess FTX was in. We found out quite a few months after what happened with Luna and 3AC. So that's, again, now that FTX has just happened, when are we going to find out where the bodies lie? And we may find out, March next year, there may still be a load of skeletons in the closet that come out, and markets might need to react to that then. So people kind of trying to park their protection in that medium-term part of the curve, basically. Okay, so that's kind of it on the vol side. You can check out the dashboards for yourself. Nothing really to add on those. If we look at crypto option flows, what did we see last week in the market? As I mentioned, we did see some bullish flows returning as people, kind of sniffing out that the downside momentum had gone away, similar to what I was saying. So, what have we seen? We've seen 30th of December call buying in the 18K and the 19K strike. That's these big orange bars here. We also saw some short covering on the 2nd of December. So that's expiring this Friday. That's on the 17 and the 18K strikes. Obviously, those things aren't worth a lot now. So people buying those back against shorts, because when the vol had spiked, people had sold some of those really expensive short-term calls. And now the vols come down and the market kind of didn't do anything. You can monetize those shorts, basically. Put-wise, we saw some put sellers on the 14K strike. That looked like a monetization of hedges as well. And then one interesting trade in the longer part of the curve is these June 23s. So you see these big yellow bars here. That was the 30K, 45K call spread in June 23 that went up in reasonable clip. And that was basically a reduction in open interest on the 45K strike. So whoever owned those 45K calls was effectively rolling them down to the 30K calls via buying that call spread. Okay, and they were just basically getting rid of that position that was miles away on the 45k strike and parking it, putting a bit more premium into it and parking it in the 30k strike, thinking that that might have a better chance of doing something by June next year, basically. Okay. Looking at Ethereum flows, we saw more of those call calendar sellers from last week, big size trading there on the 30th of December versus March 23. 1,600 call calendars, selling March, buying deck again. So that was one of the bigger trades in Ethereum again. We also saw a big call spread go up, similar to the June 23 in Bitcoin. We saw a deck 22, so end of this year, 2,600, 3,000 call spread going up, sold in massive size, talking about 70,000 options. So big clip for Ethereum. Unclear to me if that was a closeout or a roll down or a bit of both. So it looks like there was some call spread open positions that were getting closed, but the open interest did drop as well on those 30Ks, whereas it didn't drop by as much on the 2,600. Sorry, not 30Ks, 3,000s versus 2,600s, which makes you think maybe it's a bit of a roll down of positions as well. If we look at the downside stuff, there's some selling going on Jan 23 and March 23 800 puts. Those were part of bullish risk reversal trades that were being done. So they were buying some calls, kind of zero cost-ish kind of things, buying calls, selling puts, where that skew's been very elevated in Ethereum. So taking advantage of that attractive pricing for those bullish risk reversals. And then you've got the 2nd of December, 1,300 calls. That's the pink bar here, which was just some short-dated call speculation, which was also a buyer, basically, right? So just trying to pick up some cheap gearing to any kind of short-term bounce if this thing did catch a bid, but it doesn't. Oh, you never know, right? I mean, it's bounced back a bit today, so it might have a shot, but we're running out of time because that thing expires on Friday, so maybe it was a little bit too short-dated to come good. Okay, so that's the flows that I'm seeing in crypto. Okay, that's it. That's it for today. Thanks for listening, and I'll catch you all on the dailies this week. Take care.